Much. All right, I got 9 minutes and 40 seconds, so this is going to be pretty fast. So Western Copper and Gold listed on the TSX. So we were talking about Australia. Now we're back in North America. Very simple company. We've got one large copper gold project located in the Yukon in northern Canada. We've been developing this project for about 12 years. The drilling is complete. The project has a full feasibility study, and we're about halfway through permitting. I always like to pause on this first slide too and point out that this is what it looks like in the Yukon. It gets cold, but it's actually not all that mountainous where this project is located. I will be making forward-looking statements, so please review this before making any investment decision. Just a little bit of the basics of the company. We started the year, we did a small raise, a bit of a friends and family raise at the beginning of the year. Gives us $7.5 million in the bank. We're sort of picking at some key permitting things right now, so that gives us 2.5 years of runway in front of us. Market cap is a little over 100 million. That's in Canada on the TSX. We're also listed on the NYC American in the US as well. Where the shares, management and board is 8%. 7 of that 8% is with our chairman, Dale Corman. There's a group of high net worth individuals, and really these are people that have invested with Dale in the past that represent about half of the outstanding shareholders. So here's the headline numbers. A big copper gold porphyry, and you look at the top row there, that's the reserve, and the bottom row is the inferred resource, which is located beneath that reserve. But you add those together and you're looking at 18 million ounces of gold and 10 billion pounds of copper. So this is a significant copper gold resource. When we look at the project and we look at where the revenue, what the projected revenue in terms of copper gold split is, it's about 50% of the revenue from copper, 40% from gold, and about 10% from molybdenum. And it's a big copper gold project, but if you look at the copper market, we need a lot of copper mines. And this is an oft-shown supply-demand curve for the copper market, and it says in the next decade we need 5 million more tons of copper. You look at a project like our Casino project, needs 65 mines the size of that to make up that supply deficit. So it's a very significant supply deficit. And I've been showing this slide for a number of years, and investors say, Paul, when is this actually going to happen? When is this supply, when is the crunch going to happen? Well, it's happening now. I mean, these are headlines from the past 2 months. You're starting to see the majors start to talk about M&A. You're starting to see a number of articles talk about the shortage. This is something that is beginning to be felt now and is reflected in the copper price and also the behavior of the major copper mining companies. And if you look at the junior space, and to be fair, this is TSX centered, you look at the junior space, and we went through the junior space on the TSX and found every junior mining company on the TSX that had at least a copper project with at least a PEA. That's the whole space. It's not a big space. I've been asking people who I've been meeting with here, I said, well, how many copper companies are you meeting with? And they say, well, 1, 2, I think there's only 2 of us here. Lots of little gold companies in the world. There's not a lot of copper projects out there that are controlled by juniors, and particularly controlled by juniors that are economic, in good jurisdictions, and are fairly close to being shovel ready. So, good copper resource, over 100,000 ton per annum production of copper plus 400,000 ounces of gold. Located in the Yukon with a very supportive government, excellent economics of over 25%, and 3 years away from construction. So dive in a bit more. This is the management team is shown there. I've talked about Dale and myself. The other key guy there is Cam. Cam's our VP of engineering. He spent the bulk of his career with Bechtel. He was project manager in Las Palambras, the big Antofagasta mine in Chile. He's got big copper concentrator experience and absolutely key in terms of the development of our project. Shows the development timeline. We acquired this in 2006 by acquiring Lumina Resources, if that's a familiar name. This is another Ross Beatty copper project for those of you who are familiar with the sector. We got the project in 06, finished off the drilling, did 2 pre-feasibility studies and then a full bankable feasibility study, and then finally brought it into permitting in 2014. So we've got 3 years of permitting left. We've been in permitting for 4 years, so I can tell you with confidence that these big projects take a while to get through the permitting process, but we've got most of the key issues sort of out of the way and a fairly clear path going forward. Deposit cross-section is shown there. In gold at the top is the cap. The cap is depleted in copper, enriched in gold. You start mining that first, that goes on a gold heap leach. Beneath that, in the light and dark orange, is the main part of the deposit. That's 965 million tons at 0.5% copper equivalent. Importantly is that the first 4 years, and that's in the light orange, is 0.7% copper equivalent. So when we look at the economics, you can see that that's absolutely key in terms of driving the good economics on the project. Beneath that, in the red and blue, that's the inferred resource. It just doesn't have the drill density, but that's absolutely mineable material. When we look at the size of this mine, the reserve is 22 years. Incorporating the inferred brings it to 55 years. You're looking at half a century of mineable ore already identified. And then I'm showing a picture here showing a couple other geophysical anomalies we found in the region that suggests there's even more ore there as well. This is why, copper companies like these big porphyries, they tend to last decades. Economics on this project are excellent. This is $3 copper, $13.25 gold. Project has a close to $3 billion net present value and an IRR over 25%, payback in under 2.5 years. And, those are great numbers and, certainly something that we're very happy with. But even more, I think, important is that if you look at this and you stress test this project, you look at the bottom of the last cycle, $2 copper, $1,000 gold, project still has an IRR of over 15%, which is absolutely key in terms of, getting financing for building these projects. So I talked about the early high grade at 0.7 as being key. The other key thing here is the strip ratio. These big copper porphyries, these big copper mines, they need low strip ratios to work. 0.59 to 1 strip ratio. That's why this project works as well as it does. Absolutely key in terms of making sure that the project economics add up well. No projects go very far without good social license. We work very closely with the First Nations and the governments in the Yukon. And we were very happy. That picture was taken in September of last year. That's our Prime Minister of Canada. The guy next to him, who you probably don't recognize, is the Premier of the Yukon. They were in town to make an infrastructure announcement. That infrastructure announcement was 3 roads. One of those roads is the road to our mine. So that's, if you look at that road, that's 200 kilometers of road. The first 100 kilometers is 100% funded by the Yukon government, and the second 100 kilometers is 30% funded by the Yukon government. It's been an interesting couple years up in the Yukon. If this shows a claim map of right around where we are, if I showed you this 2 years ago, it'd be a bunch of names you didn't recognize. Now I'm sure you recognize a few of those. Bordering us to our, on the west is Goldcorp. Bordering us to the east is Agnico and Kinross. So these are all, the majors have moved in. They understand the value of the Yukon. They understand that it's a friendly place to be building a mine. Capital, big projects, big capital, $2.5 billion. But key here, if you look at this in terms of capital intensity, is that we've got pretty much an average capital cost compared to comparable projects of this size. A bit about costs. I'll focus you in on the co-product cost, which is the best thing to look at mine of this with the division of copper and gold. And you can see $1.43 on the copper and $6.33 on the gold. So I've got 10 seconds left. Anyhow, pretty good investment thesis here. You've got great fundamentals in the copper market. We've got a project with size, economics, and location. And we've got a great history of creating shareholder value. Thank you all.